In less than 4 years, I turned a $1,000 investment into $10 million. And today, I'm gonna share the exact playbook I used, but it won't be free. I don't want to be another guru telling you that I'm not trying to sell you anything. Because let's face it, the time you're spending watching this video is your most valuable asset. And I'll never take it for granted nor consider it free. So why am I really doing this? Well, I want to deliver insane value for 3 reasons. The first one is that the more I teach, the more I learn and the better I get at what I do. Second, the more value I provide, the bigger my audience becomes and the more interesting people I meet. And third, I run multiple software companies, which is why I can talk about it with zero bullshit. And eventually, if you find insane value in what I say and find one of the SaaS I run useful to solve one of your problems, you might become a customer. But I'll never push for it because for me, 1 and 2 are already enough. Now let's get to business. Before we dive deep into the subject, let's debunk a few misconceptions. The first one is that you need a lot of money to start a business. Having no money at first will force you to focus on what matters the most, the success of your customer and the financial profit you're making. You don't need millions of dollars to start a business. A few $100s can be enough, and we'll see how later on. The second misconception is that most people will tell you that building a SaaS costs a lot of money. In reality, building a SaaS business costs almost nothing. You have a lot of no-code tools out there to help you out. And over the last few years, the SaaS market has made a lot of millionaires who self-funded their companies. The third misconception is that raising $1 million makes you a millionaire. But that's not the case. Let me explain. The money you raise is not your company's revenue or value. It's money investors will give you to fuel the growth of your company because they believe you can make them more money. That's why it's called an investment. And from such investment, they expect a return anywhere between 2 to 100 times what they gave you. And whether or not you succeed in making them more money, they'll be the first to get their money back. For example, if they invested $1 million for 20% of your company, if you sell for $1 million, the investors will call for the preferred shares to get back the initial $1 million they invested. Even though they only had 20% of your business, they still get their $1 million first, and you'll end up with nothing. That's why not raising funds will give you full freedom and ownership of your business. So how exactly is it possible? Well, there's a rule of thumb that says that profitable SaaS businesses of that size are sold between 2 and 4 times their annual recurring revenue. And since most people will tell you that your annual recurring revenue is equal to 12 times your monthly recurring revenue, which is not 100% accurate, but that's an industry standard. So if you're generating $40,000 in monthly recurring revenue, your annual recurring revenue will be 40,000 times 12 or $480,000, meaning that you'll be able to sell your SaaS between $1 million and $2 million. And since you don't have any investors, you'll get 100% of the money and also pay tax. But keep in mind that the price of a SaaS company depends on multiple factors such as the revenue, the yearly growth rate, the industry and market, the retention and churn, the average customer value, etc., etc. So you're probably wondering how exactly do you sell your SaaS company? Stay tuned because I've got you covered at the end. With that being said, let's check out how you can become a millionaire in your 20s. The first step is to pick a crowded market. It might be counterintuitive, but hear me out. When I started Lemlist in 2018, I picked the most saturated market of cold emailing. In reality, picking a new market is sometimes even more risky because a crowded one means that there is already a high demand for a problem to be solved. And if you're able to offer a solution to solve the problem in a unique and very efficient way, you basically have a multi-million-dollar opportunity in your hands. Let me give you an example. Marta and Rebecca created Flowdesk in 2019 in a totally saturated market, email marketing. Everyone told them it was a very bad idea because there were already tons of email marketing tools out there. You can think of MailChimp, ConvertKit, HubSpot, etc., etc. Yet, they still created their company because they spotted a problem no one had solved before. All of the existing tools weren't adapted for creators and small business owners. Within 4 years, they reached $20 million in annual recurring revenue, 100% bootstrapped, meaning without raising any funds. Simply by adapting a product that already existed for a specific niche. And the best part is if they decided to sell their business now, they would sell for anywhere between $80 million to $200 million. Now, if you plan to start a SaaS and don't know the best market you could pick, I listed a few for you. Social media marketing, email marketing, CRM, payments, project management, ATS or applicant tracking systems, etc., etc. Then the second step is to build vertically in the market. Building a SaaS vertically means that you'll solve a specific problem for a specific type of person. Let me give you a simple example. Let's say that you're an entrepreneur and you have to choose between two banks. Bank A is a bank for entrepreneurs. Bank B is a bank for everyone. Which bank would you choose? My guess is that you'll go for Bank A because you would automatically believe that they are solving specific problems for entrepreneurs. And you'd probably be right because it's way easier to focus on a specific type of customer than on everyone, which is overall a great way to differentiate yourself from the crowd and build your value prop. The third step is to create a community. When I started Lemlist, I decided not to raise funds and bootstrap my business. So I had one priority, making profit as fast as possible, or else my business would die and my girlfriend would kill me. If you want to know more about why bootstrapping is the best way to grow a profitable business, check out this video I did on the subject. So what did I do? Well, since I didn't have paid ads or influencers to promote my product, I built a community around sales automation. The advantages of a community, well, you bring people with the same expertise together. You push them to help each other and you establish yourself as a thought leader in a specific field. You also get tons of potential beta testers and clients for your products. Overall, it becomes a defensible asset because people can't copy nor steal a community. And on top of that, it's free to start. That's how in just a few years, I gathered 20,000 cold emailing experts and potential customers for my product in one single place. Now, let's see how you can build it. Building a community is based on building trust with people. And to build trust, you follow this very simple framework. 1, targeting, how you identify your prospects' problems and needs. 2 is the messaging, how do you convey the value you bring to people. And 3, credibility. How exactly do you demonstrate your expertise in a specific field? Let me give you an example of the Lemlist family, which is the community I created back in 2018. First, I identified that people had really low open rates on their campaigns because they struggled to get their email delivered. Essentially, whenever you're sending a lot of cold emailing, they can end up in the spam folder. Essentially, no one sees it, which is called the deliverability. So eventually, I started to see people in the community who wanted to create some sort of engagement pod. Essentially, people will send messages to each other, and eventually, if they saw that someone from the community has sent them a message, they would put it back into the inbox if it ended up in the spam folder. And that's why I decided to create the very first warm-up tool ever created on the market called Lemwarm. And because of the expertise I had demonstrated on the community, people trusted me with this new tool and even showed a lot of support. Now the next step, which is generating revenue. So how exactly do you grow to $40,000 in monthly recurring revenue with your SaaS? Let's say that to use your product, each user has to pay $20 per month. So to get to that $40,000 per month, you will need 2,000 users. But how do you actually find them? The first thing you can do is to create your personal brand using the trust framework I talked about before. Let me give you an example of a great personal branding strategy that follows the trust framework. Justin Welsh is a solopreneur posting content on LinkedIn. So he's targeting other solopreneurs like himself who want to grow on LinkedIn and grow their businesses exactly like he did. So second, how does he convey his message? He's essentially showing how he's building his one-person business to $5 million in revenue, which is basically the dream every solopreneur out there wants to reach. And third, how exactly does he establish his credibility? He's using his strong following and showing the world how he's making money through his personal brand and also his course. So once you've built trust by sharing content that solves a specific problem, then and only then you'll be able to sell something to your audience. You can also start on Twitter like Thibaut, YouTube like Ali Abdal or even Alex Hormozi, or Instagram like Sahil Bloom. But keep in mind that LinkedIn is the best place, in my opinion, for B2B SaaS founders. The second hack you can use is to be featured on podcasts that have an audience of at least 100 people. Appearing on other others' podcast is a great way to reach a larger audience and improve your SEO ranking, as you'll get some backlinks every time you record a podcast with someone. Why only 100 people, you might ask? You need to follow what I call like the stairs tactic. So you picture a stair. Each step corresponds to an influence stage. The first step is people who don't have much influence yet, people who haven't started building their audience or business, essentially. As you go up the stairs, you'll find people with larger and larger influence. And the highest step is where you have the most successful people out there. Think of Elon Musk, Jeff Bezos, Bill Gates, etc. Pardon. Hey, Bill. So here's how I was able to get featured on other people's podcasts in the early days of Lemlist. I was sending this exact email template. First, I know that if I had to rewrite this email, I'd probably jump directly to the second sentence and not introduce myself that early. Now, let me explain to you why it worked. I used the value equation to write my email. The dream outcome times the trust you build with them divided by the effort it will take to achieve the dream outcome. So the dream outcome was stated in the subject line, a new interesting story to tell his audience. Then I built trust using the trust framework, which starts with the targeting. I identified a common problem podcast creators encounter, the difficulty of finding new guests and new stories to share in their episodes. Because let's face it, no matter how big your business is, some people don't know how to tell good stories. So I used this pain to trigger his attention through an intriguing subject line like, I've got a story for you. And I made sure to explain myself later on the email. And then this brings me to messaging. I showcased the value I could bring to his podcast by detailing my journey building my company. I also showed him that I had listened to his podcast by talking about a previous episode with Sean Finder. And then I explained how my story would be a great fit for his podcast and what I was planning on delivering if I had the chance to be interviewed by him. I even added more topics I could talk about that I thought could be interesting for his audience. Essentially, I made his work easy like a breeze. And then I demonstrated my credibility by sharing my LinkedIn profile and a podcast episode I had recorded a few weeks ago. Finally, the effort to achieve the dream outcome was very low, welcoming me as a guest on one of his podcast episodes. Since whenever you reach out to podcast hosts, you don't want to piss them off, only make one follow-up and make sure not to be too aggressive. So that's why in the email, as you can see, I tell him that it was essentially my final follow-up and that I will not try to contact that person ever again after that. And with those simple emails, it allowed me to get an answer from the podcast, and I was booked in essentially tens of podcasts back then by using this very simple method. If I had to rewrite that email, I would answer another question, which is what's in it for him? And to do so, I would potentially add the number of people I have in my newsletter, how big is my audience, the fact that I would happily share it with my audience. That way you build a lot more trust and you're helping the podcast host, which is a win-win situation. So my next hack is about finding customers through your competitors' social. So how exactly does that work? You go on your competitors' social media, check out their followers, and send messages to the most relevant ones. So let me give you an example. Let's say that you have a SaaS that helps creators send newsletters. One of your big competitors could be MailChimp. And if you go on their Twitter account, you'll see that they have 260,000 followers. Now let's say that a bit more than 1% are actual creators. That would be around 3,000 people. Now, basically send them this DM. And around 3% may convert to your tool. That's already 90 customers. So if you do it with each of your competitors, you can grow a big user base pretty fast, and that can also be automated. So the first hack is to build viral loops by turning your customers into brand ambassadors. That is basically what Beehive does. In the free version, they add a visible link to their tool at the end of each email sent by their users. And in the paid version, obviously, they allow people to remove the branding. In other words, if the users don't pay, they promote their tool. If they don't want to promote, they pay for the tool. It's a win-win situation for them. Finally, you can use affiliate marketing to grow your customer base. Basically, you'll ask people to promote your tool to their audience. Videos, articles, newsletters, social media posts, and only if they sell, they will get a commission. It can be some cash per new subscribers, like what Canva is doing, or a percentage of the sales. HubSpot, for example, was offering either a 15% recurring commission rate for 1 year or a 100% flat fee on the first month's revenue, or even a car like ClickFunnels. So that's a great way to push people to promote your tool to a larger audience without paying them upfront. And if you want even more in-depth tips on how to get your first customers with no money, check out the video I created on the subject. Now let's get to the final step to becoming a millionaire, the sale. Once you have reached $40,000 in monthly recurring revenue, you can keep growing your company to make even more money, or you can sell it. And you have 3 ways of doing so. The first one is to sell your company by yourself by reaching out to buyers. Laura Roeder sold her SaaS for 7 figures with cold emails. After 6 years, her company was highly profitable, bootstrapped, and making millions in revenue. Basically, a very good buy for any small private equity firm. So she decided to look for micro private equity firms who had previously bought SaaS businesses doing single-digit millions of ARR. And she sent each of them straight to the point emails declaring that she wanted to sell her SaaS. With that strategy, she got 3 firms to show interest in her company, and she ended up selling it to SureSwift in a 7-figure deal. The second way is to go through an M&A firm. M&A means mergers and acquisitions. Basically, third parties helping you find a buyer, and in exchange for their service, they'll take a percentage of the total sale. And that's exactly what I did when selling my company Lempod after growing it for 18 months to $600,000 in annual recurring revenue. While I was traveling in Europe, I met Thomas Mal, the founder of FE International, a SaaS M&A advisor. That's when I actually got to know about M&A. I started talking with him to see if I could sell my company Lempod through his firm. And the reason I chose to go through the sale with an M&A firm was that I got help from a firm that already had a network of buyers and that knew how to close a sale. Second is I didn't want to spend months trying to sell the business, and I wanted to go as fast as possible so I could keep focusing on growing Lemlist. So they essentially took care of the whole process for us, estimating the valuation, create a sales prospectus, reach out to potential buyers in their network, organize meeting with buyers, help us with the negotiation, due deal, transition, etc., until the closing of the deal. And the third part is I didn't take any risk as a business owner since I didn't have to pay them upfront. They only get a percentage if the sale goes through. You have tons of M&A firms out there. So before you actually go through this process, I would advise you to check out the firm you're selling with and ask for feedback from other people who sold their companies with them so you don't have any unpleasant surprises. The third way, which I think is pretty sexy, is to list your company on a SaaS marketplace. Here are a few examples of SaaS marketplace that you can use to sell your SaaS. Acquire, it's basically focused on SaaS owners and indie hackers. Flippa is another one, which is more specialized in selling startup and online businesses. Empire Flippers, created to sell SaaS and online businesses. And Tiny Acquisition, which is for way smaller acquisition. So for me, there are multiple advantages to selling using a marketplace. One, it's the best place to sell your company fast when it's not making millions in annual recurring revenue yet. Second, the process of submitting your company for sale is really easy. Third, you'll have some support to go through the sales process, which can be pretty tricky when you're selling company for the first time. And fourth, you'll access the marketplace's database of buyers, which will make the sale faster since you don't have to look for investors. Marketplaces already helped thousands of founders sell their SaaS in a few months. But to me, the biggest disadvantage of using a marketplace is that the sale is public, meaning that everyone can see that you're selling your SaaS and at which price. When you're going through a private equity or M&A firm, everything is done behind closed doors. So you have a lot more privacy essentially. If you want to know more about how to sell a SaaS, I've added an article on how I sold one of my SaaS company in the description. Let me recap how to get $1 million in your bank account. Step 1, pick a SaaS in any crowded market. Step 2, build the same SaaS, but for a specific niche. Step 3, build a community serving that niche. Step 4, grow your SaaS to $40,000 in monthly recurring revenue. Step 5, sell your SaaS for 7 figures. If you like this video, drop a comment below. And if you want more, I created a weekly newsletter where I share actionable tips on how to grow a profitable SaaS company. You can check out the link in the description. See you soon. Peace, love, and profits.